What's going on YouTube? My name is Ty with Dividend Stock King here with another video. Today we're talking about the stock market and how the drop in the market can ruin a lot of investors. And before I begin the video, I'm not giving you financial advice. I'm not telling you with the money. Please invest at your own risk. Okay, the risk in investing in anything. And please don't follow my advice. I'm not an expert. Please go seek one. Now, right now, today is June 14th, 2022 on Tuesday. We're officially in the bear market. Okay, yesterday the people above said that we're in officially a bear market, which means stock market price have dropped below 20%. And bear market, people are selling, and there's a lot of things going on in the world that's out of your control. Now, people don't. It's hard to explain because, you know, as you see my portfolio, I'm down today. I'm down. I've been down almost all year. I mean, I've been down pretty much this year, 1 year. I've been down. I'm down $1,200 altogether. But this past year, this 3 months, I'm down $3,700. I'm just down. Okay, so I've been down almost the whole year. So people panic and they start selling shares. And here's the thing people don't understand. You don't lose money until you sell. Okay? You don't lose money. As you can see here, most of my stocks are red. And most of my stocks, I'm pretty much negative money. Some I'm positive, some I'm negative. The best thing you can do is don't panic and you have to let the market rebound on itself. Okay? Remember, in 2020, 2019, stocks was at pretty much all-time high almost. It was going great in the stock market. Going great in the stock market. So if you sell your stocks while in a bear market or the prices are cheaper, you will lose money. You bought a stock at $10, now it's $7, you're gonna lose $3. So the best thing you can do is wait. And I tell people, that's why dividend investing is the best approach, because it can be a down market and you have good companies, good ETFs, they'll still pay you a dividend. And while the price goes up, I'm getting a dividend. So even though the price are down now in the bear market, I'm still getting a passive income. If you know and dividend investing is for long term anyway, because the dividend investors I talk to or you see online, they're investing for the long term. They're investing for another income stream. So they don't matter whether the market go up or down. They want that passive income coming in to pay monthly bills. People want to live off dividends. Some people like myself want to pay all the household bills. You know, if I get $1,000 a month in dividends, that pretty much cover all the household bills. So I'm a long-term holder. So while the market is bare, to me, it's a great time to invest because the prices are cheaper. I get a cheaper price for the stocks, and most companies probably still pay the dividends. Okay, so that's for me a bear market. Remember, I'm a dividend investor. Yeah, people who invest in growth, who want you buy a stock today for 10, you won't go to $12. I like dividends because I want passive income when I retire. I don't want to live off the dividends. I want the dividend income to pay all the household bills. Can I explain to people, hey, look, you're going to have a light bill forever. You're going to have a light bill till the day you die. You're going to have a phone bill. As long as you have a cell phone, you have a phone bill. You're going to have a water bill. Okay, you're going to have car insurance. These 4 bills, not everybody have a credit card. Not everybody have student loans. But these 4 bills, the main 4 bills you have for pretty much for the rest of your life. When you're 85 years old, 90 years old, you will still pay a light bill and a water bill and a cell phone bill and a car insurance if you're driving. So my dividend portfolio is designed to pay those bills for me. I don't have to work to pay those bills, because that's the main thing people pay. These monthly bills add up, and you pay them every month. You could pay off a house in 30 years. You could pay off your credit cards. You could pay off your student loans. But these bills in particular, you can never pay off. you can never ever pay it off. You have bills for the rest of your life. You could pay a house off. You could pay it off. You could get a house at 18 or 20 and live for 30 years and pay extra payments and pay it off in 25, 27. You can pay it off, but your power bill and water bill you can't. So I'm a long-term holder of dividend stocks. This is why I invest in dividend stocks. The whole market is down. Now, if I would have sold some of these stocks, that would be a bad thing because because I was taking a loss. Okay, so the best thing you can do if you're in a stock market or you're starting a stock market, you have to have a long-term goal. Okay, that's the key. This is long-term. You're not touching this money for the next 10 to 20 years. Just like real estate, it's long-term. Okay, you get a house, it takes 3 to 4 months to get it fixed up. It might take a few weeks to find a tenant. It takes time. So the stock market is long-term. Okay, it's not short-term, it's long-term. So that's the goal you must hit. Okay, so all my stocks, even the ETFs I have, they're all down. Some are doing pretty well. I opened to new positions this today. Kind of sold off some stocks, and I reinvest that money into newer positions. So that's where we're at right now. And you see my portfolio. I'll tell you what I added real quick. I added Gain. I bought Gain years ago, 2 years ago. I should have kept it. I shouldn't have sold it. And I bought a share. And I'm gonna still get that dividend and reinvest it. I bought SREIT, SRIT. I bought that new. I bought Rio new. I threw $5 into it just to get my foot in the door, and I could start putting $10, $20 onto it every 2 weeks and give me a full share. OKE, I bought a new position of $5 of that. SLG, it's another monthly payer. I bought $5 of that. OMF, I bought $5 into that. And that is I believe a finance company, a finance company. And I bought $5 of that. I bought Old Republic. They're a holding company, insurance, doing insurance too. So I opened in 1, 2, 3, 4, 5, and SREIT 6. I guess you count Gain 7. So I opened 7 new positions. Also opened I opened IEP. They pay a really good quarterly dividend. They're a good company, and they're invested in, they believe, 8 different businesses, as far as food packing, energy, automotive, metals, real estate, home fashion, and pharma. So they're pretty much diverse, and they pay a really good dividend as well. So I got one share, 1.1 share, and I opened a position today. And SVOL is a new ETF. It's very complicated to explain. I'll have to do a video about that and try to do more research on it. But essentially, it's hard to explain what they do. As you see here, it provides income to short-term exposure to S&P 500 VIX short-term futures, and they do cover costs as well. It's very hard to understand it. But I bought me a share, and that's why I do my stocks anyway. I buy a share. I throw $5 in. I buy a share, and I hold it for a while to see how it performs, how the price go. Do I get a dividend? And that's how what will get me to buy more shares. So I opened this one too, Philip Edison Company. I got $5 in this just to get some money into the residential trust. I already shopping centers. And I bought that just to get my foot in the door. Sometimes, I tell people, man, look, you don't have to get a full share. Throw $5 into a stock, and you get your foot in the door. You're in, and to see how much dividend payment you get, and then you'll put $10, $20 every 2 weeks, get you a full share. So that's the end of my profile. That's the end of the video. Be careful out there. You get, just bad and good things in the stock market. But the main thing is this. This is why I like dividends. That's why you have a goal on dividend investing, because a dividend investor is long term. This bear market is not going to interfere with nobody in dividend investing, because we already know that we have lows, we're going to have highs, and we want the dividend income to pay our monthly expenses. We want the cash flow coming in, because we want to build other cash flows as an online business, as in real estate. We want to build other cash flow besides dividend investing. And again, it's for me, it's to pay the monthly bills and not to live off of, not to pay a mortgage. And I want to get $2,000, $3,000 a month. But if I get $1,000 a month in dividend income, I'm cool with that. Because I'll pay pretty much all the monthly bills, light, water, our internet, our cell phone, all the monthly bills that we get every month. It will pay it in full. So the money we was putting on those bills could go somewhere else. We could buy more stocks. We can do real estate. That's the goal. For we do retire or get 60 years old or 70 years old, I don't have to worry about these bills. I can pay all my dividends and just go on. So that's the end of my video. Please subscribe to the channel, like the video, share the video. I'll see you next time.